Now, SCHD ETF is not only one of the best dividend growth style ETFs across the entire market in my personal opinion, because it's cheap to own, it's very well diversified, it's grown over time in price, and on top of that, it's paid more and more in dividends consistently year after year. Now, for those reasons and many others, SCHD is my largest dividend growth ETF position across my portfolios, and I'm currently sitting at over 2,300 shares as of right now. But in this video, we're going to go over why SCHD ETF might be one of the best ETFs to buy for 2025 and beyond, and why it's still cheap as of right now, even where it's trading. So if you're a fan of dividend growth investing and if you're a fan of SCHD, I promise you're going to want to stick around until the end. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, we're going to go through this article that I found right here. I thought it was very, very good. It's titled SCHD is both cheap and good, and this is brought to us by JR Research on Seeking Alpha. And if you guys want to try Seeking Alpha, I do have an affiliate link down below in my description. So the title obviously sucked me in because as of right now, SCHD isn't necessarily super cheap in my opinion, but I guess for a long-term buy and hold position, it probably is. But let's read on. So it says summary, SCHD has delivered a nearly 24% total return over the past year compared to its trailing 12-month dividend yield of 3.3%. Investors can benefit from potential capital appreciation given the fundamentally strong companies in its holdings. They also said that this ETF focuses on mature dividend-paying companies with strong economic moats and defensive sector allocations. Notwithstanding the lack of exposure to AI-focused stocks, SCHD's recent outperformance suggests the market has reallocated to value stocks, which it feels like it indeed has. I argue why SCHD's outperformance could persist given its solid buying momentum and attractive valuation bifurcation against the broad markets. So sounds interesting enough to me. Let's see what this writer has to say about SCHD and why it's both cheap and good to buy. So it says SCHD ETF outperformed the market over the past 6 months. SCHD investors have enjoyed a remarkable run underpinned by the bullish rally observed across the market. Therefore, dividend investors have also benefited from SCHD's total return of nearly 24% over the past year. This ETF focuses on sustainable dividend-paying companies. The ETF's robust fundamental thesis has bolstered its solid momentum. Moreover, the ETF's valuation remains well below the S&P 500's, SPX, SPY, and the NASDAQ, QQQ, and NDX, potentially mitigating the downside for investors in an unanticipated downturn. Now, while the 3.3% trailing 12-month dividend yield seems relatively attractive, it has declined from its almost 4% metric observed in October of last year. Hence, the capital downside has played a prominent role for SCHD investors like myself that was able to load up on a ton of shares back when this ETF was yielding north of 4%. They then wrote on and said SCHD more defensive setup mitigates downside volatility, and they showcased some of the companies in the ETF. As seen above, SCHD's top 10 holdings are focused on more mature dividend-paying companies accordingly. Nearly 85% of SCHD's total holdings are assessed to possess at least a narrow economic moat, underlying the robustness of its fundamentally strong proposition. Moreover, the ETF has allocation in more defensive sectors like healthcare or like consumer staples. These sectors are arguably more defensive than the market, with lower betas relative to the rest of the markets. They also said it's essential for investors to consider the fundamental construct of the ETF, which is designed to track the Dow Jones US Dividend 100 Index. The index places an emphasis on the high quality of dividend stocks, focusing on critical metrics such as ROE, dividend growth rate, and free cash flow to total debt. In addition, companies represented in the index must have paid out at least 10 consecutive years dividends, highlighting their track record like we can see right here. Now, despite that, the ETF doesn't invest in REITs, MLPs, preferred stocks, or convertibles. Hence, investors looking for real estate sector exposure might find other ETFs more suitable. However, the ETF is still assessed to be well diversified with sector and stock weightings limited to no more than 25% and 4% respectively. Therefore, investors who prefer to ride strong winners over time could find the strategy unsuitable. The writer then said SCHD's fundamentally strong ETF underpins its bullish thesis. As seen above, SCHD's top holdings have demonstrated the robust profitability bolstered by an A-range profitability grades. In addition, momentum in its leading stocks is mainly above the C range, suggesting buy momentum has been constructed. Despite that though, it's also clear that these stocks aren't mega growth stocks that appeal to growth and tech investors, given their mostly D-range growth rates. However, the appeal for SCHD has not been lost to more defensive, income-oriented investors appreciating its total return bullish proposition. As a result, I assess that the fundamental view of SCHDs remain robust, helping to mitigate portfolio volatility for investors. Now, lastly, the writer said SCHD relatively attractive compared to the market. SCHD's PE of 13.6 is well below the S&P's 22.1 metric. It is also below the Nasdaq's 26 times earnings multiple, corroborating its more attractive valuation. Therefore, the ETF seems well positioned to benefit from a continued reallocation to value or less expensive but fundamentally strong stocks. So honestly, I thought that was a really good overview of where SCHD is trading as of today, how it could be offering some upside from here, because the fact that some investors are rotating into value names that aren't necessarily super flashy, that aren't necessarily growth monsters by any means, but names like Cisco, Home Depot, Bristol Myers, BlackRock, Chevron, etc., names that have been trading for years, paying dividends per years, and names that broke through multiple screens to even make it in the underlying index in the first place. And that's sort of the beautiful thing about SCHD, is that because the way this ETF works, if any of these names don't meet the criteria that the Dow Jones US Dividend 100 Index is asking for them to meet year after year during the reconstitution, the names will be kicked out to the curb and new high quality names will be entered. So honestly, as a long-term investor, I sleep well at night knowing that SCHD does have a basket of stocks that aren't the flashiest, aren't the prettiest necessarily, but companies with economic moats for the most part, and companies that have a track record on multiple different metrics. But the real question for investors is SCHD really still a good buying opportunity, even though it's trading just off of the all-time highs, at least as of film in this video? Now, of course, it depends on any investor's time frame, but if you were to compare SCHD to the rest of the market, this ETF as a whole is still offering some upside opportunity, at least compared to SPY or NDX. Now, lastly, before I go, I want to share some other super high quality dividend growth style ETFs that I either already have a positioning personally currently in my portfolio, or if not, are awesome ETFs to definitely look into, just to prove that although I'm obsessed with SCHD, there's other ETFs on my radar too. Now, VIG, the Vanguard Dividend Appreciation ETF, is one of my other favorites. This is an ETF in my portfolio as of right now, and I have been adding to it pretty consistently over the past 6 or so months. Another one of my favorites are DGRO, or the iShares Core Dividend Growth ETF, which offers a lot of things that are similar to SCHD, but honestly has a holding basket that might even be better. And lastly, DGRW, the Wisdom Tree US Quality Dividend Growth Fund, is one of my other favorites that offers a monthly paid dividend, some substantial dividend growth over time, and a basket of holdings that might be my favorite across all the dividend growth ETFs in the markets. But even with all that being said, I'm super happy to see how large my SCHD position has grown over the past several years, and this is a position that's not going anywhere anytime soon. So now that we went over why SCHD could be a good buying opportunity still at this price, and why this ETF could be a massive opportunity for 2025, I lastly, most importantly, want to hear from you guys down below. When it comes to SCHD, especially where it's trading as of currently, basically really close to all-time highs, do you personally think that SCHD is still offering a good buying opportunity at these levels? Let me know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.